I'm not bad. I am not bad. Hey, okay, everybody, welcome to the Morning Vol Report. This is Andrew Giovinazzi, filling in for Mark Sebastian on what seems to be a. Oops.
Muted. Unmuted.
I know. I can't. I haven't had time to fix the music, Giovanni. um, you know what? Anyway, the market looked worse last night. Seems to be kind of normalizing a little bit. Let's just look real simply at VIX here. Um, but clearly things were, for a while, even after the close, they really sold vol off hard. And all of a sudden, Europe opens and volatility goes back up. Let's look at our friend, the pound. Still not looking great. Okay, not looking great at all. I mean, it's just like a broken record. Every morning starts like this. Treasuries are up, all-time low yields. I think for the 10-year. Banks are under pressure now because of how low the how flat the yield curve is and things like that. Um, Gold's still going up. So basically, you've got the classic, everybody's, they say risk off scenario. It's, I don't know why the data's so slow here. I'm just going to switch to my ball. So what we got real simply is this. Volatility now, just keep an eye on this going forward. All right. Now look at we have some vol here, and I want to show you the tick chart of volatility yesterday, which I thought was kind of important. Okay. Ever get it going here. There's a 5-day for VIX, right? So this was the holiday setting in for VIX. So that was a big deal on the 3-day holiday. So you kind of discount it. So basically, look at the vol where we were before the holiday, right? And essentially, we just got back to that yesterday, climbed a little higher. And we're now a little bit higher than really what I would say what the real vol was. Okay? Not a ton, a little. Okay? But what I really want to show is, how they vol even after the holiday markup. Now it came down a bunch. It's starting to just slowly drift back up there. So just keep an eye on the short-term VIX options. Keep an eye on the weeklies. This is the thing. It really looks like since nothing's going to be solved overnight, your volatility is going to remain a little higher than normal because there's no resolution. So without any kind of real resolution or grand European pronouncement, we're not going to crash VIX. But everybody has woken up now for a week and a half since the Brexit vote. And things are still, the economies are still running. The only thing that seems to have gotten worse is seems to be more headline strain on European banks. And we'll see if that really, that I would say is the next real indicator of troubles. You've got, we'll just call the marquee Euro bank, Deutsche Bank. To me, this looks like it's trading at, it's not bankruptcy, but it's certainly right around the lows. Here's Barclays, kind of pinned to $7. We'll look for some trade ideas in there today. RBS, all of them. So the financial sector, it's either going to be the buy opportunity of the century. Is that Lloyd's? Or there's a lot more on the books of these banks than we know about. And that's the simple, But the thing to note is, and this is what I think is important, it hasn't stopped, right? It's like the pound, okay? it just is not stopping. So market volatility tends to rise when you get kind of that one direction. It's that rubber band stretching, which naturally drives vol up. The U.S. economy, though, relatively, doesn't look too bad. Doesn't look like we're in a recession. There's a high demand for U.S. denominated assets, and that's where we are. Dollar looking better, oil going down. But nothing really, it's not like they're just crushing everything. You've got, Apple's up, safe haven type stock, right? Google even. I mean, there's hardly much movement here. So there's weakness, but there isn't jumping out of the window. But there's definitely, it's still soft. So again, I like time spreads. I like put time spreads mostly because what's going to cause us to rally hard in the next week? The non-farm payroll number, I guess a good employment report could send us higher. Just because things aren't so bad. But it looks like because of Europe, I think they've pretty much taken all the interest rate hikes off the table for this year. That's it. And unless things in Europe actually headline news get markedly worse, we're probably going to have slightly higher volatility in a range. And it's going to stay like that for a little while. And again, so just keep an eye on the volatility of the vol products. All of this stuff, though, here is still working its way out. It's not finished yet. There could be some opportunities, but as of right now, it just looks like there's just not a bid for it. So we will take a look at some of the European banks, maybe some trades against XLF, because there is some sort of sympathy with it. I mean, we're looking at vol's higher a little. These really aren't making a huge move down, so tough to really see what's going on here. Okay, but we're just clearly not at that level yet, but we're at recent lows. Okay, and with that, I will see a lot of us in the chat. We have platinum class today, and you guys have a good day. Excuse me. Oh my gosh, what is these?